Well, Apple is taking a pounding this week. The tech giant getting a second downgrade this morning. Piper Sandler's Harsh Kumar cut his Apple rating to neutral from overweight after holding that bullish view since March of 2020. Now, he cited in a note that a weak macro environment in China will dampen demand for iPhones. Barclays was also concerned about those iPhone sales, as well as waning demand for Mac laptops and iPads. Now, this isn't a common occurrence for the tech giant. Let's put that in perspective. It really is used to getting love from the street. A favorite, of course, of legendary investor Warren Buffett, the stock has only 5 sell ratings, according to Bloomberg. Now, the stock has been falling for the last few days amid these calls, weighing on the tech-heavy NASDAQ. Here, with how much of a massive market cap the stock has lost, is our very own Blikre. Strange times indeed here for Apple.
Yeah, it really is. I mean, you put the macro environment in terms of what's happened this year in the charts, kind of strange. But let's focus on Apple, down 1.38% today, and we'll get into the market cap calculations in a second here. Just want to show you, in the 3 short days of this year, Apple already down 5.6%, and the rest of the mega caps have not fared much better. I want to get to some of the analyst commentary. First, Piper Sandler today kind of doubling down on the Barclays note that we saw earlier this week. Piper is concerned about handset inventories, growth rates. Those have also peaked for unit sales. That's their belief. They're also concerned about currency headwinds. That means a stronger U.S. dollar. By the way, the U.S. dollar has been stronger this year, coming off a pretty big support level. So that headwind could not only continue, but mount. And then the interest rate environment. It's not just the idiosyncratic problems and concerns of the company. It's also the global environment. So higher interest rates are a headwind for Apple as well. And here's a brief quote from Barclays from the other day. iPhone 15 has been lackluster, and we believe iPhone 16 should be the same. So Tim Long, similar view there, although they did issue a sell equivalent rating on this stock. And when you take a look at the market cap drops this year from the Magnificent Seven, Apple by far and away leading the pack, 129 billion. That's about as of 30 minutes ago. Nvidia down almost $500 billion or 50 billion. And then we kind of trail off there. Microsoft 40, all the way down to Google, down only about 8 billion. Hasn't really been hit that hard this year. But I do want to take these losses in stride here and compare them to the 2023 gains, because Apple and Microsoft both saw gains in market cap of $1 trillion last year, dwarfs what's been lost so far this year. Nvidia's up there, Amazon, Google down the line, even Tesla, almost $500 million gained last year. So you put it all into context here. Tech has definitely fared poorly. This is a NASDAQ 100. I'm going to switch this over to our sector look. And there's XLK, the worst performer of the year, down almost 4%. So in as much as Apple is a bellwether for tech and tech is a bellwether for all kinds of things in the risk community, not looking good so far this year.
Indeed. And it's hard once you think of those highs that we saw after that AI boom really pushed the Mag 7. So important to have that context. We appreciate you breaking that down. Our very own Blikre.